There's no denying that AI stocks have gained serious momentum in the past few months, making names like Nvidia quite popular. However, while US AI stocks are trading at high valuations, there are AI stocks on the other side of the world patiently waiting for investors to notice. Tonight, I will explain to you why the AI stock market in China looks so promising and how you can get exposure to it. So don't go anywhere because this might be the most important video you'll watch today. Chinese companies and American companies don't always seem to play with the same rulebook. In the US, companies like Google and Microsoft have long track records, transparent governance, and strong intellectual property protection that encourage investors to buy their stocks even at a premium price. On the other hand, Chinese companies are often burdened by concerns like government interference, privacy issues, and the lack of compliance with regulations. This has kept their valuations down. Nevertheless, the AI scene is vibrant in China, and the country is investing heavily to develop their capabilities, like building chip-making foundries. As of last May, China's government set up a third investment fund worth $47.5 billion to continue developing its semiconductor sector. This is part of China Communist Party's 5-year plan spanning from 2021 to 2025 to make China less reliant on exports and more on domestic consumption and efficiency. So what's the outlook for Chinese AI stocks? In the short term, there may be headwinds due to regulatory uncertainty, but long term, the potential is huge. China is also investing heavily in AI research and development, and they have a large user base to test their tools and applications with. For instance, last December, Chinese tech company Baidu said its generative AI chatbot had surpassed 100 million users, which means it is close to the 180 million users of ChatGPT. We can also look into other tech sectors to get a glimpse of what's about to happen in the AI space. For instance, in the electric vehicle market, a few months ago, Baidu launched the 6th-generation robotaxi built by Jiangling Motors Group. Both analysts and Chinese government officials believe China has already exceeded in the scaling of the EV industry in comparison to its US and European counterparts. They are also expecting similar results in other AI fields. In terms of opportunity, there seems to be many Chinese AI companies ready to start moving significantly higher. The most obvious one is Baidu, which covers all AI layers, ranging from robotaxi, data centers, and apps, to cloud and ERNIE 4.0 Turbo that rivals ChatGPT. Baidu stock was trading around $80 back in September, but it has exploded to the $115 range within the past few weeks. But this is not the only Chinese AI stock company ready to explode. A few others alternatives are WeChat owner Tencent, which is focused on monetizing online entertainment and harnessing targeted advertising. PDD Holdings owner of Temu and Pinduoduo, which is rapidly expanding its global e-commerce business. SenseTime, which is leading in facial recognition, and Megvii, focused on computer vision, are also names to watch as they sit at the forefront of AI innovation. In summary, if you are concerned with the high valuations currently found on AI stocks in the US market, maybe it is time for you to develop a global approach. China seems to not only have promising AI companies already, but it's also investing heavily in the field, a combination that may result in outsized profits down the road. Finally, if you've enjoyed this video, I'd like to encourage you to subscribe to this channel so you keep getting insights into the ever-expanding AI world. Disclaimer: the content provided on this channel is intended for informational purposes only and should not be construed as financial advice, investment advice, or a recommendation to buy or sell any security or digital asset. The information presented is based on publicly available data and is subject to change without notice. Viewers should conduct their own research and due diligence before making any investment decisions. The channel owner is not responsible for any losses incurred as a result of decisions made based on the information presented.